So a big question for home buyers today is, should they buy a house now or should they wait? And a lot of people are waiting on the sidelines, hoping that the market's going to crash and interest rates are going to go down. So let's look at a few things and decide if it's right for you to buy now or to wait. So as a real estate agent, one of the things that I do is I'm constantly monitoring the market to see where the market is headed. And nobody has a crystal ball, but there is data, I should say, that will give us an idea of where things are headed. So there's three things that I look at. Median house price. Is it rising? Is it going down? Is it holding firm? Obviously, if it's rising, it's showing strength in the market. If it's going down, it's showing that the market is softening and it might continue to go down. The worst thing that can happen if it holds steady, because then you're trying to figure out which way it's going to go. Second thing is days to offer. Are the days to offer low or high, or are they increasing or decreasing? Again, if they're decreasing, it's showing strength in the market. If it's increasing, it's showing a softening market. The other thing that I look at is, where is the list price to sale price ratio? A healthy market, the list price to sale price is usually 98% to 100% of asking price, meaning just below asking price or asking price. And so those are the three things that I tend to monitor quickly to see where the market is headed, especially when I'm talking to home buyers and home sellers and deciding, what is the market value of a home. So right now in Essex County, and you can see the data above me here, the median house price is right around $680 right now versus $475 in 2019. But more importantly, from 2022, October 12th to today, in 2023, October 12th, the median house price has increased 5%, and that's still showing some strength in the market. Over a 50 or 60 year period, average appreciation has only been around 3%. So 5% is still pretty healthy. When we look at days to offer, in 2019, it was 13, which was extremely quick, to today, which is 7, which last year was 7 as well. So that's holding firm, but again, extremely low. Take a look at 2012, and the days to offers was 82 days. Now, over my career of over 20 years, average day to offer has been more in the 60 to 80 day range than 7. So even if days to offer went up 3, 4, 5 days, that is not a significant change. We need days to offer go up 30 or 40 days to see a significant change in the market. We're showing a healthy market. The other thing that we should take a quick look at is list price to sale price ratio. So what did the home sell for compared to its list price based on a percentage? So today it's about 102%. And as I said before, 98 to 100% is healthy. 2012, in a market that was in transition from a recession to a healthier market, it was 96%. So again, we're showing signs of strength in that arena as well. So what does this boil down to? We have a serious inventory crisis. There just isn't enough houses on the market for the demand from buyers. And that's what's driving the market. That's what's making buyers react quickly and scoop up properties quickly and still offer over asking. There just isn't enough houses to satisfy everyone. And it looks like that is going to continue. And the inventory crisis has been a long-standing one that goes back to World War II. We've slowly been declining on the amount of housing we have for our growing population in the United States. But more importantly, there's been some significant issues in the past 10 years. One is during the downturn back in 2008 to 2012, builders just completely stopped building, so they weren't adding inventory. And then since COVID, basically, a lot of sellers have been holding off putting their houses on the market because they had lower interest rates. And as interest rates rose the past couple months or a year and a half, they're just unwilling to sell and give up their 3% interest rate. Also, what we're seeing is a lot of older folks that would have probably transitioned into downsizing because of the economic downturn earlier this century. They worked longer, so they were holding off putting their houses on the market as they worked longer to build more funds for their retirement. So there's a bunch of issues going on here. There's no one thing that has added to the inventory crisis. But the point is, we have an inventory crisis, and until that inventory crisis changes, nothing is nothing is going to change as far as house prices going down. We need to see inventory climb before we see house prices go down. Some of the other things to consider is, when we talk about inventory, I need to look at my sheet here. In 2019, year to date, there were 7,900 homes listed. This year to date, is 4,600, and last year was 6,100. So we're seeing an extreme shortage of inventory this year, and it's only going down, and it looks like it's going to continue to go down. Also, some other things to look at are foreclosures are extremely low. So last year or year to date, only 19 foreclosure homes came on the property, and only 7 short sale homes came on the market and sold. I should say they sold, not came on the market. Extremely low. Back in the peak of 2008, 2009, 2010, almost 30% of the market was short sales and foreclosures. So we need to see some of that climb before there's a change in the market. My advice to you, if it's time for you to buy and the money makes sense, buy. If interest rates go down, refinance. If you wait, it's probably not going to benefit you. It's going to hurt you. And the things to think about is, once interest rates start going down, the chaos is going to continue because more buyers are going to want to buy. So now you're going to be seeing, 20 offers on a property. You're going to be waiting in lines at open houses, and you won't be able to get the house. You'll have to fight to get the house you want. Where right now, even though it's difficult, it's way better than it was a year and a half ago. Second thing to consider is, if you wait a year, house prices are going to increase again. And so if you take the 5% increase this year and apply it to the median house price and look at it from a year from now, that 680 house is going to be worth approximately $710,000 to buy that same house. So you combine the chaos, people offering more over asking than they are now, and house appreciation, you're probably going to put yourself in a lesser of a position than you would if you just bought now and then refinance if interest rates go down. Now, just one last topic is interest rates. Are they going to go down? Nobody has a crystal ball. Nobody knows. All the experts have been saying it's going to go down significantly by the end of the year this year. They have not. We're probably looking at one more increase by the end of the year. And things will probably hold steady through the beginning of 2024. So interest rates aren't going anywhere either. So again, if the timing is right and it makes sense and you can afford the payment,